Good morning everyone, this is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 12th of October. The dollar defied Fed officials' bullish comments and it remained under heavy selling pressure even after Fed Vice Chairman Stanley Fischer became the latest policymaker to support the case for a year-end hike, joining William Dudley, Dennis Lockhart and John Williams. During the IMF's annual meeting in Peru, he said that while the previous two payroll reports have been disappointing, the job market's prospects for further improvement look good overall. In line with the other FOMC members, he downplayed the significance of the weak September NFP report and emphasized on the overall labor market improvement. The dollar index, which measures the greenback value against a basket of 6 major currencies, touched a low of 94.69 on Friday, its weakest level since September 18. The aspect of a US rate hike gained more supporters during the IMF's annual meeting in Peru. Many central bank officials said that they prefer certainty over agony of waiting, and compared to a year ago, several emerging market governors were keener that the Fed just go with it. In such case, the uncertainty over the impact on the markets from a forthcoming rate increase will be reduced, as simply delaying the increase will not solve the situation. Therefore, I would treat the current weakness in USD against its major peers as a corrective phase. As for today, the economic calendar is very light and trading activity is likely to be thinner than usual. It is the Thanksgiving Day in Canada, the Health and Sports Day in Japan, and the Columbus Day in the US. The US equity market will be open, but banks and the bond market will be closed. There are three speakers on the agenda. The focus will be on the Atlanta Fed President Dennis Lockhart and Chicago Fed President Charles Evans on any signs if they also support the notion that it will be appropriate to hike this year. Bank of Canada Governor Stephen Poloz also speaks during the day. As for the rest of the week, on Tuesday, China's trade surplus for September is forecast to have declined. Both exports and imports are expected to fall at a faster pace than in August. One of the reasons that the People's Bank of China devaluated the yuan was to boost the nation's exports. This doesn't seem to have the desirable effect though. Also, the decline in imports could hit Aussie and New Zealand dollar since Australia and New Zealand are heavily dependent on exports to China. The German ZUW survey for October is also coming out. The survey for September showed a mixed picture for Eurozone's strongest economy. The expectations index declined once again from the previous month, while the current situation index increased moderately from the previous month. This time, both indices are forecast to decline a bit, which could prove negative for the euro. We also get inflation data from the UK. The headline CPI is expected to have remained flat in September, while the core rate is expected to have risen a bit. Given that last Thursday, Bank of England officials were concerned that inflation is likely to rise slower than previously expected, a disappointing figure is likely to push further back expectations of a rate hike by the Bank of England and put GBP under renewed selling pressure. On Wednesday, China's CPI and PPI data for September are coming out. The forecast is for the CPI rate to decline to 1.8% year-on-year from 2% previously, while the PPI rate is expected to remain unchanged. The slowdown in the CPI is likely to add to concerns over China's economic slowdown, and alongside the disappointing trade balance could hurt further the Aussie and the Kiwi. In the UK, the unemployment rate for August is forecast to remain unchanged at 5.5%, while average weekly earnings are expected to have accelerated to 3.1 from 2.9 previously. Further improvement in the UK job market is likely to support the pound, which could erase some of its Tuesday's losses if the CPI data disappoints. In the US, both the headline and core, excluding autos and gasoline retail sales for September, are expected to have risen at the same pace as in August. The US PPI is also coming out. On Thursday, Australia's employment report for September is coming out. The unemployment rate is forecast to have risen to 6.3% from 6.2%, while the net change in employment is expected to show an increase of 5,000, much less than in August. This could prove EUR-negative as well. In the US, the headline and core CPI rates for September are coming out. The headline CPI is expected to have turned negative, while the core CPI is expected to have remained unchanged, having in mind that on Thursday, the Fed minutes showed officials worried about low inflation, and dip into deflation will confirm their concerns and increase the possibilities that the committee may not raise this year. Finally, on Friday, New Zealand CPI for quarter 3 is forecast to have slowed, which could be negative for the Cuba as well. This will bring the annual rate down to 0.3% from 0.4%. The inflation rate remains well below the 1 to 3% target of the Reserve Bank of New Zealand, and consequently, this increases the probabilities for the bank to cut rates at its next meeting at the end of the month. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX.com, wishing you solid trading.